Thank you so much for joining Dental Marketing Theory, a podcast by Gary Bird. In today's episode, Gary talks with Matt Mulcock. Gary and Matt from Dentist Advisors chat about all things money. As always, please make sure to like, subscribe, share, and leave a comment, as all of those things really help to get the word out about dental marketing theory. Hope you enjoyed today's show.
All right, we are live. Good to have you on today, Matt. I really appreciate you taking the time to hop on and talk to us today.
Yeah, Gary, thank you so much for having me. Super excited to be here.
Awesome. Well, let's start with this. So how did you get into the financial world inside of dentistry? What's your journey there?
Yeah, I wish I had like some super exciting story of like all these deep connections in the dental space, but honestly, just kind of happenstance. So I started my career in the financial industry 10 years ago. I started at Fidelity Investments, very generalist, very large asset management firm, one of the biggest in the world. I started there just entry level, right? What we'd call pre-licensed. So when you work at these brokerage firms, you have to actually transact securities or trade or do anything like that, you have to be licensed. So I went there literally as a customer service, lowest of the low you could possibly think of. So I started there, got my licenses, started working up and getting exposure to the financial industry investment world. Worked there for about 5 years. During that time, my wife got into PA school out in Southern California. We were just talking about this before we hopped on about our connections to Southern California. So we ended up moving out to Orange County. I was very fortunate with Fidelity having a national presence. I moved out to an office there in Orange County. And that's really where my career or my job turned into a career, I'd say, where I started to really be like, okay, I could do this for a career. I really loved what I was doing, meeting with people face to face, helping them with their financial planning, investment planning. When my wife graduated, it kind of coincided with some personal family stuff that was going to bring me back to Utah. So my wife graduated. I ended up resigning from my position there and we moved back to Utah. And my plan at the time was I'm going to resign. It was all amicable. It was all worked out. I was going to take a few months off to be with my family. And then the plan was to go back to Fidelity. And in the interim, coming back to Utah, I kept coming across this name and this company. And the name was Reese Harper. The company was Dentist Advisors. It came up a couple of different times over the course of maybe 2 or 3 months, one of which was a recruiter who reached out to me. And so the name kept coming up and I thought, man, like this, I got to check this out, right? I'll be honest, Gary, when I first heard that Reese tell me, and when I heard from the recruiter that Dentist Advisors only does financial planning for dentists, I was like, my first thought was, why, just dentists? Like, that's kind of weird. That was my first thought.
Yeah.
I met with Reese, I met with the team, and I honestly was hooked from the beginning, talking to them and how they approach planning. They really helped me understand why they went niche, and I just connected and resonated with me so well.
Can you fortunately, share some of that with us?
Sorry,
I know it is. Can you share some of what drew you to it, right? Because it is weird, right? So like nobody, when I try to explain to people that they're like, what do you do? Digital marketing. Oh, what is that? We help dentists get new patients. What do you mean? Like, what do you, you know what I mean? Like, it's like almost like this, like you might as well say that we live on Mars. So what did they say to you to kind of get you to jump over that chasm?
Yeah. It's a great question. So when my first response was like, why just like, that was literally my first question. Like, why do you only work with dentists? And so Reese explained to me very well, and it totally makes sense. And this is something I share with people now all the time, that there's kind of two parts of this. So the first part being dentists are just really unique in the fact of what we call them as entreprofessionals, right? They're kind of the last frontier of this whole clinician and business owner, right? Really it's gone away almost completely in the medical, MD space. Pharmacists used to fall under this category, but they've kind of been corporatized out of that, right? Mm-hmm. So they fall into this really unique category of what we call entreprofessional. And
which all medical professionals used to fall under that category at one point, right? Like every doctor was visiting homes and building their own business and their clientele. And so kind of everybody fell under that. And so I've never thought about it that way. That's really interesting.
Yeah, you're absolutely right. I mean, they used to fall under that, and now it's again really just dentists for the most part. And I know there's obviously corporate, the DSOs and things that are changing the landscape a little bit. But what
Hmm.
Reese found and what we have found is there's some unique challenges that dentists are facing that we felt like we could provide even more value. And that's really what it comes down to at the end of the day, Gary. And this is what they sold me on is the value that we could add to our clients that goes deeper than what I was doing at Fidelity of just, again, generalists. I'm working with an attorney, or I'm working with,
Yeah.
a doctor. I'm working with insert any profession that you want. Reese found long ago, about 10 years ago or so, going niche, going into dental, or the dental space, how much more value we could add. And then secondarily, I'll be honest, there is some selfishness to this as a business. It's a lot easier to market yourself when you're
Yeah.
in a niche, right? So
Yeah.
it's easy to go out and say, hey, we only work with dentists, or referrals. If we're getting referrals from our clients, it's not, hey, who do you know that has money? It's, hey, do you have other people that are in the dental space who you went to school with or who you work with that we may be able to talk to and be able to help. So it was a kind of a symbiotic relationship there, kind of hitting both, adding a ton of value to our clients. And
Yeah.
also it just makes it a little bit easier to market ourselves.
Well, it also helps you understand like how your client is struggling or how you can best support them as well, right?
Absolutely.
You can't learn all the pitfalls as deeply that dentistry may face if you're also working with lawyers and sports people and these doctors
Exactly.
and these all these different groups. You just can't dig as deep, right? So it really allows you to dig deep and really become that specialist. And just like in anything, what I've noticed in business is if you're a generalist versus a specialist, specialists always, require more money because they're going to be more specialized to what you're actually looking for. So
Sure.
I think
Yep.
that's really, really neat. I've learned that firsthand in dentistry. And the other thing that I've learned, and I'm interested to see if you feel the same way, is that everybody who's in dentistry that's not a dentist ended up here kind of by accident. Like no one was like
Yeah.
woke up and was like, hey, I'm going to be in dentistry. All the dentists are here on purpose, obviously, right?
Yep.
And then so you got all these people who are here kind of by accident. And then the other thing is everybody who's in dentistry doesn't seem to leave it. And if they do, they always come back. So I've kind of coined the rule of you're not allowed to leave dentistry. So
Yeah. Exactly.
I think that's super interesting and really compelling. So tell me a little bit about, so now you've been in dental. So they talked you into moving. So you moved to Utah. Now you're in dental. And what happened next with your journey after you started getting in and getting your hands dirty with dental?
Yeah. So, yeah, you're absolutely right. I moved back. I connected with them, and then, again, fortunate enough that they saw something in me. I saw something in them. We connected, and then I just started working with them. I basically came from, on one end of the spectrum, large asset management firm who's pretty much got it all figured out. You're just a cog in the wheel, to now you're part of like a team that's building the wheel itself, right? Very
Mm-hmm.
small firm. We were just kind of, even though Reese and Ryan and the group had been around for several years, they were still very much, and we still even are, still very much a niche, small RAA. And so I jumped in basically with the mindset of, I'm here to do what is ever asked of me. I'm here to learn as much as I possibly can and help build this thing. And now I've been here for 4 years. And so I started out with what we call our associate team, just kind of learning the ropes, just kind of
Mm-hmm.
figuring out the inner workings of how the company runs, how we approach planning. And then from there, kind of worked myself up. I started taking on my own clients, building my own book. And now I kind of play a hybrid role. So now I am a senior advisor with the firm, and I'm also the director of financial services. So I'm kind of helping the advisor team and the product team kind of build out our services even more.
Yeah. So why don't you tell us a little bit about your guys' services and what you do from that standpoint?
Yeah, definitely. So we are a no commission comprehensive financial planning firm for dentists. That's kind of a mouthful. Kind of break down what that means.
Yeah.
And here's the truth of it, Gary. Here's the unfortunate thing that we always talk about in our space, right? It's not like a dentist, right, where there's kind of a base level. If you're going to a dentist outside of just complete fraud, if you're going to a dentist, that there's a base level of education and expertise that person holds, and you can't just go hang a shingle and say, "Hey, I'm a dentist."
Mm-hmm.
That doesn't necessarily exist. That continuity and consistency of what is a financial planner? What is financial planning? That doesn't really exist in our industry, unfortunately. And there's a lot of bad actors out there in our space that say, hey, I'm a financial planner. And then all they do is sell insurance products. Not to disparage insurance salesmen. It's just that's a
Oh, yeah.
job to be done. It's just
Yeah.
not financial planning. So
Yep.
we are a no commission comprehensive planner. So what that means is we sell no products. We do advise on everything from insurance to investing to estate planning, debt, cash flow, really all of the above. We just don't sell any products. So again, insurance is the best example. We'll advise on life, disability, liability. We tell our clients all the time, hey, you're underinsured in this area. Let's get you connected with someone to add that to your plan, but we're just not
Yeah.
going to sell that product.
Yeah. And then and why is that a big deal? Like what's the big deal about not selling that?
Yeah, for us, we feel like I'm not going to sit here and pretend like you can remove all conflicts of interest from every relationship, right? There's kind of an inherent conflict of interest when you're there selling yourself. However, we want to remove as much as possible. So we feel like that's a really easy one to remove for our clients, is saying, if I'm going to tell you you need insurance, you're going to know that it's not because I'm getting a commission for it. So we've removed all commission. Same thing with like referral partners. We've built a really great network. We're always networking with people in the dental space, from consultants to attorneys, CPAs, marketers. We want to make sure we're making those connections, but we're not sharing any revenue with anyone, or
Smart.
Either way,
Yeah.
because we
It's kinda
don't want our client to think we're we have that conflict there.
Yeah, that's really smart. I know, like a good example more that people would understand is like what was happening with Wells Fargo, where they were like, "Hey, we're going to bonus
opening
you
up accounts.
$100 to open up an account," and all these guys were like, "Okay, well, we'll open up a bunch of accounts," and they weren't telling people they were opening up accounts, right? And they ended up opening up all these accounts and got all these massive bonuses, but they found out that the people didn't ask for them, or nor did they need them, right?
Yep.
Like they didn't need those accounts. And so there can be a conflict of interest there that really goes deep if the incentives are off, right? So if you're getting massive amount of bonuses on a particular product that you sell that may be yours or maybe someone else's, then all of a sudden you're telling everybody to sign up for that product because you get 50% commission on it.
Yep.
And the end user doesn't know. They have no idea, just like at the Wells Fargo example. So I really like that. I like that you guys approach it that way. I know there's other models, and not to say their model's wrong, but I like that mindset. So tell me a little bit about some of the things. So you're working with dentists all the time. What's like your average size dentist that you're working with?
Yeah, we actually just did kind of an analysis on this for our end of year podcast we did on our show, to kind of give us an idea of where our core client falls, right? Kind of our average client, if you will. So right now, our average client is about 40 years old, practice owner, has around a $1.5 to $2 million net worth, in that range, with an income between 450 and 500,000. That's like our core average client. Now, with that said, we work with clients all over the spectrum of dentistry. So we're actually moving, for whatever reason, we've actually started moving a little bit younger with our audience, like the people that are reaching out to us. And we're actually rolling out new models right now to like help accommodate the younger dentist out there, whether that be associates. We still work with associates, and obviously just starting out practice owners, and then all the way up to retiring dentists and retired dentists. We work with everyone all across the spectrum.
Got it. And so as you're working with these dentists, what are you seeing that like the pitfalls that most dentists fall into? Like if you were going to give just like a quick TED talk, and you only had 5 minutes to be like the pitfalls of dental financials, what would you hit on?
Yeah, it's a great question. So I'd say number one is I'd say a lack of focus that comes from a failure to define what success means to you. So that's kind of a lot, but really, so I actually saw this, Scare. I was kind of glancing through your website, and I noticed your core values, and I thought it was really, really interesting to this topic. Your first and your last are kind of answer this question. It's your first one you put understand why, and your last one you put know yourself. And I think that a lot of the pitfalls can be boiled down to that very thing. So I'll give you an example. We joke all the time internally, and I joke with my clients. I joke with audiences when we're doing presentations or on the podcast. And this is just an example we see. I say all the time, man, dental school is a long time to go to school to come out and become a real estate mogul. And, it usually gets like a chuckle from people because dentists realize that like they get distracted very easily, and real estate use seems to be one of the top things. But whether it be real estate, whether it be insert anything you want on the practice side, it usually comes from a lack of focus because they're not coming back to this idea of what is success to me, right? Am I trying to build a lifestyle type practice where I work 2.5 days a week and I don't ever really care about if my collections go up over 7 figures too much? Or am I trying to build a 5 or 10 location DSO to sell to some private equity group? That's a very, very different career path.
Yeah,
and a very,
totally.
very different.
They're both dental, right? But
Yeah, they're
that's
both
where
dental.
it starts and ends.
Yeah, but very different worlds. And so I think if you don't have someone with you, like we always talk about, like an accountability partner, you don't have this definition of success that, by the way, can change all the time. We're not saying it can't change, but we too often see people kind of making what we'd call random acts of finance because they fail to have this definition of success in their mind and continually reviewing it.
Yeah. It's interesting because inside of what we do for marketing, I'm constantly like like pushing all the time of what is success? What is success? What is success? Like we literally have client success managers. And so we're always trying to define it. And a lot of times people are like, well, success for me is like, something that can't be measured, right? Or something like that. And it's like, okay, that's great. You can have that for you personally, but for marketing, we need to know like a KPI or something that you're trying to get to, so that way we can reverse engineer it and actually make sure that you're happy. And it's harder to get people to that, even for a metric like new patients. So I can't imagine from a life standpoint, you probably have to do a lot of gymnastics to help people get there of like, what do they want to do? Because I know firsthand, like I know dentists firsthand that want to be full-time clinicians and do the best work in the world, and they're amazing at it, be a full-time CEO, right? They got 5, 6, 7 locations, and also do all the other stuff you're talking about, the real estate and the this and that and the other, and it's hard, right?
Yeah.
Like how can you do that? I don't know anybody who's able to do that. So how do you help somebody actually work through that?
Yeah, it's a great question. So the first thing we do when a client comes on board with us, the very first meeting we're going to have is what we call the discovery meeting. And this kind of lays the groundwork for exactly what you're talking about. And we're not claiming this is going to be the end all be all, but what I always tell people is, hey, there's a lot of quantitative aspect of financial planning and investments and your practice, right? There's a lot of quantitative numbers and figures and all of that side of this part, or the spreadsheet side of your life, right, of your financial life. But how often do you actually take the time to talk about the qualitative, the human side of this? So that first meeting is laying the groundwork for our clients of what is success to you? Why is money even important to you? What are we trying to accomplish here? And then we revisit that discussion, so that kind of again lays the foundation, and then we come back to that type of discussion throughout our working relationship. We're talking to our clients minimum 2-3 times a year, and we're overlaying on those conversations. And along with all the financial spreadsheet stuff we're doing, we're trying to continually come back to that idea of, hey, doc, you told me that X, Y, or Z thing is really what's important to you. You told me that, slowing down and spending time with your family is really what you're focused on right now at this stage of your career. And yet 6 months later, we're now talking about you adding another $1.5 million in debt and going out and building another location. That's okay if something has changed, but let's talk about where this lines up with what you told me you valued. So just continually having those conversations and providing opportunities for our clients to keep talking about it, I think is the key.
Yeah, it keeps you aligned on what they want to do. That's in business. The one thing that I've learned is can we get aligned on this, right? Like you can move the goalpost, you can change your mind, but can we get alignment so that we can help you accomplish whatever your goals are? So if success is one of the bigger traps, what's some other things that you've seen that end up getting dentists either when they're retiring or it's somewhere along their financial journey?
Yeah, so I would say outside of that, the one I mentioned about success, I'd say the number two or maybe 1A, 1B falls more on the spreadsheet side of things, which is a lack of organization. I'd say that, someone either coming to us, working with us, or maybe they don't work with us. They're just people we talk to out in the industry as a whole. Lack of organization is a huge trap that we see dentists fall in, where again, which leads to what I mentioned earlier, these random acts of finance, because they have no idea where they even stand. They have no clue
Are
what their
you
net
are
worth
you
is.
are you talking more of like, okay, yeah, it sounds like you're going are you talking more like an accrual basis accounting versus a cash base, or are you talking more on the back end of the
So
equation?
I'm talking about like their personal financial situation, right? So even building like a net worth statement, right? Their balance sheet. We do that on the front end with our clients, and through the first 30 or 60 days they're with us, we're getting them organized. So we're going to know what their spending is, what their, so overall cash flow, all their assets, all their debts, their insurances, getting completely financially organized. We spend most of our day with our clients on the personal side of things, their personal financial life. But
Got it.
obviously, with dentists, there's a lot of crossover with their practice and things like that. So,
Hmm.
but yeah, just getting organized, meaning their overall financial picture.
Got it. And so what are some of the steps like when you say that's not organized, like what does that mean to somebody who's like, I don't have that, or I don't even know what that means. Like what do you walk them through?
Yeah. So if I was talking to someone right now and saying, just on the street, right, and they said, "Okay, where do I start?" That's a really common question we get. Like, where do I even begin this process? There's two things. If you were going to go tomorrow or today, and you were going to start getting organized around two pieces of information in your financial life, personal financial life, it's your net worth and your spending. Those are the two things I'd say that are going to have the biggest impact for you in a starting point. So net worth just being literally get a piece of paper out, list out to your best guess. You don't even have to be exact here, but just get a piece of paper, write all of your assets, bank accounts,
Mm-hmm.
investment
Mm-hmm.
accounts, 401ks, your house, any real estate you own, your practice. That's on the top end of the page and all the values. Down below, list all of your debts, your student loans, your business, your home, anything that's on the debt side. You take the total asset, you minus your total debts, and you come up with your net worth. Start tracking that over time, at least a couple times a year as a starting point, and that puts you on a good path to start getting more organized, to start making better decisions. And then the second part of that being start tracking your spending. Every time I bring this up, Gary, I get this look of like, oh, you want me to start doing a budget? That is not at all what we say. There's a big difference in saying track your spending, just know what you're spending generally
Yeah.
on a month to month or year to year basis versus start tracking down to the exact penny what you spend on socks. Very,
Mm-hmm.
very big difference.
Yeah, got it. So that's really, really helpful. So then so with the dentist that you're working with right now, what stage in life are you seeing them struggle the most with these concepts? Is this being an associate and then trying to figure this out, their next steps? Is it buying that first, second practice? Is it selling the practice as they go to retire? Where's the biggest hiccup in their journey?
Yeah, I mean, I would say all of the examples you just gave, we have people coming. When people come to us, it's usually with the prerequisite that they're struggling with organization as a just a core issue that they have, and at any stage that you're describing there. Now, I would say the peak level of complexity for a dentist is when they're either beginning to or they're already in a practice because they're managing a staff, they're managing
Mm-hmm.
all their debts, maybe they still have student loans. So again, that's why I believe that's probably the biggest reason why our main client right now is like mid-ish career practice
Mm-hmm.
owner, because that's where organization becomes the most apparent. At least it's the first part of their life that they're like, holy cow, I'm not organized.
Yeah.
But really, at any stage you just described, it can be an issue for sure. And people hire us even just for that issue.
Got it. And you said one of the things there is student debt. How are you helping dentists with that? I know that's a big issue with just, I mean, when you come out of school and you're already $500,000 in debt, plus you have to decide if
Yep.
you're going to go in more debt to open up a practice. Like, what are you seeing? How are you helping people with that?
Yeah, great question. So again, that's why that's where the comprehensive nature comes into play with how we approach things. Is, you know, again, student debt is again what we'd call a job to be done. It's something to be focused on in your overall financial picture, but it's a piece of the puzzle. So the first thing we want to do is again get you organized, figure out what that whole puzzle looks like, and then we start digging into how are we going to approach your student loans. So again, there's a huge difference here, like I was saying earlier, between a dentist that's building out a lifestyle type practice versus trying to build a multi-location DSO, right? That knowing that is going to help you understand how do I approach student loans in the first place, right? So
So if they're trying to do both of those at the same time, it can get
y-
really hard to advise, right?
exactly. So if you're a career associate, right? If you're saying I'm never going to be an owner in a practice, totally fine. You're going to maybe have a different approach to your student loans than you would someone that's going out to build a practice, either do a startup, an acquisition, or whatever. So the first step is again walking them through understanding, helping us understand what is your overall career approach, and that's going to help us figure out how we're going to attack your student loans in conjunction with everything else you're trying to do.
Got it. And then so what are your what are your thoughts on like profitability? Is that something you help with on the dental side as well?
Yeah, definitely. So again, a good part of a good core of what our focus is on the personal financial side, right? But again, because we're dental specific, we do a lot of discussions around and have a lot of touch points around what's happening in the practice. And one of them being, what is your income actually? What is your profit? What is your cash flow looking like coming out of the practice? We do not claim to be consultants. We're not going to be the fixers of profitability issues at all. We have a lot of connections and people we're going to, network and connect our clients with. But what I always tell people is we want to be that first line of defense for our clients of saying, hey, something doesn't seem right. You're doing $1 million in collections pretty consistently. You're bringing home 250. Like, what's going on here? We'll dig in with it into a P&L and help them identify some red flags. But we're not considering ourselves the fixers. We're the people that are saying, hey, this needs to be addressed. Let's bring in a specialist to get this fixed from someone who specializes there.
So when do you know those red flags go off?
Yeah, so we have a lot of opportunities that's going to go off. Those flags are going to go off depending on where we are with our client. So they usually will go off in our what we call our onboarding process. When the client first hires us, we go through that organization type process, right? And part of that is gathering P&Ls, gathering income data, building their balance sheet, all these things, right? That is a great opportunity for us to say, hey, we're looking at these numbers. It doesn't seem to match up with what with where your collections are, again, where your growth has been. You're not taking home what we think you should be, and then it just starts a dialogue. It just starts a conversation, and more times than not, what happens, Gary, is the doc doesn't even know, right? They're just like, I haven't even looked at my P&L. I don't even know what that stands for or what that is. And so that starts the conversation of saying, great, let's get a base understanding of what this means and why we're maybe concerned or why we want to maybe put some focus here. And let's bring someone in that can help you with this process.
Got it. Is there any other red flags or things that you're watching for as you're working with people to know, okay, now we need to change our mindset around the finances?
Yeah. I'd say, you brought up debt. Uh, I guess you could call it a red flag or just something we want to address is how they're approaching debt as a whole, right? Not just student loans.
Yeah.
It's very, very common for clients to come to us. And again, one of the unique attributes of a dentist is their huge amount of debt, right? That they have to take on. Coming out of school with multi six figures, then they want to buy a house or they want to start a practice. It is not unheard of for a dentist who's like first 3 to 5 years in their career with
$1,000,000 easy.
7 figures of debt.
Yeah.
And so one of the, again, red flags or things that we're trying to work our clients with their mindset around is how they're approaching that debt and how it doesn't always make sense. We get a lot of these, not to disparage him in any way at all, but like a lot of Dave Ramseyites, right? Who are just like,
Yeah.
I got to get out of debt as fast as I possibly can. And we really want to try to have our clients approach it more thoughtfully and with a little bit more nuance to their situation.
Well, not just that, but that's personal on the, again, and I know you guys are more personal, but they're business owners too. Like you need debt for
Yep,
business to grow and things like that. It's really,
exactly.
really hard to grow a business and be totally debt free. In fact, it's not even, in a lot of cases, it's not even smart when you're starting to buy properties and things like that. Like it doesn't make sense to not leverage a long-term loan on those. So I totally get what you're saying there. What are your thoughts on that? Like, is there an asset mix that people should have? They should be more in stocks and housing. And I know that's a general term and everybody's kind of different, but do you guys give advice on that? Do you help people with that?
Yeah, yeah, absolutely. You're saying specifically on like the investment side of things.
Yeah. Yeah. Like if someone comes to you and they're like, okay, help me. What am I supposed to do? Should I be in the stock market? Should I be in, ETFs? Should I be in housing?
Yep.
What, like, the more the real estate side, like where should people be putting their energy?
Yep. Yeah. So we manage investments for our clients as part of our role as financial advisors. So we manage somewhere in the ballpark of $320 million at this point. So we're managing our clients, brokerage accounts, IRAs, really any account that's investable. We can do that for our clients, right? And so we tend to favor, for a lot of reasons that I'm certainly happy to break down, we tend to favor the capital markets or the financial markets as what I'd call your core strategy, right? Especially early on. So one of the things we emphasize to our clients early on in their careers: build liquidity. Focus on building liquidity early and often, and that means obviously that could mean cash if you're getting ready to
Hmm.
acquire a practice or purchase a home. Obviously you need cash in those situations, but also liquidity being like in a brokerage account, whether that be at Fidelity or TD or Schwab, that you're investing in the capital markets. And to your point, Gary, that could be in individual stocks, that could be in ETFs, mutual funds. I'll say right now, just generally speaking, most people should not be investing in individual stocks. If they're going to have exposure to the financial markets, it should be through a fund of some kind, an ETF or a mutual fund. We do feel like things like real estate can absolutely play a role, whether that be owning your own building or whether that be you actually going out and investing in real estate on your own. But
Hmm.
I do think, coming back to pitfalls or things we see, dentists don't always fully grasp what that actually means to be
Yeah.
invested in real estate, right?
Yeah.
And it's a lot more difficult than a lot of times
Well, it's
they're
not
thinking.
passive, right? Because
Yeah,
a lot of times we think it's passive, right? So it's like, yeah, you just buy a house and then it just pays
yeah,
you income. But no, no, no. Stock's passive. I don't have to. Once my money's there, I literally don't have to do anything besides turn in the financial statement at the end of the year. Housing stuff breaks, people move out, things happen, and that takes management energy and focus. And a lot of times, it can take your focus away from the thing that's actually generating the revenue to support that asset. So I totally get that, and I think sometimes people miss that. So, not financial advice. Like, what kind of ETFs do you recommend for people to get into, or what? I don't know how you have to word it legally to be able
yeah,
to
yeah. This
say
is
it, but
not investment advice. Yeah. So I'd say come at this from an idea of like core principles, right? So
hmm,
a core principle of investing is this whole idea of diversification, right?
yeah,
So everyone's heard "don't keep all your eggs in one basket." To your point around how passive investments are, that's a huge reason why we favor or financial markets, is because you're right, they're more passive than real estate, and which is kind of weird for people to even think about, because passive and
yep,
real estate always are connected. But the other thing when it comes to financial markets is it is so easy to diversify, right?
hmm.
So
It's
meaning
already done for you in these ETFs,
a
right?
lot of them, it
Yeah,
is, or you can hold 4 or 5, 6 positions with these ETFs or mutual funds and be very, very well diversified. So when it comes to diversification, there's kind of some core categories with under that umbrella, right? So number one being globally. So don't one of the common investment pitfalls we see logistically when a client comes to us and brings us their portfolio they've been managing, almost without fail, one of the first things we see is what we call home country bias, meaning they're pretty much all invested in the U.S.
mm,
While we think that's great to have a really good core chunk in the U.S., we think that you're better off over time spreading some of your risk around all over the world. So, having better
Is that
exposure
because some
to
of
not
these
only
is
just
that
the
s-
US.
is that because some of these other markets are booming, right? Like they're developing and they're going to keep developing. Is that what you're looking at, or what are you looking at other things to help them make that decision?
Yeah, so we're generally just looking at a balance of risk versus return, right? So the where I get pushback on this topic when I'm talking to people out there, which is very normal, right? Someone will say, Matt, why wouldn't I just invest in the S&P 500, right?
Hmm.
Why wouldn't I just snag the S&P 500, put all my money into that? Look what it's done over the last 12 years, minus this year so far, right?
Yeah.
But if I just look at the last 10 to 12 years, I'd say absolutely. You're right. The last 10 to 12 years, the S&P 500 has done incredibly well. The US market in these large tech companies has pretty much dominated everyone.
Hmm.
But if you actually take the 10 years preceding that, right? So if you take the last 10 years, yes, take the 10 years prior to that. We call that the lost decade on the S&P 500.
Hmm.
Basically, if you would have invested in the S&P only from 2000 to 2009, you would have gotten a negative like 2.5% rate of return on
Yep.
average per year, right?
Mm.
Whereas if you would have had exposure to the rest of the world, Europe and these emerging countries in Asia, in Africa, if you would have had some diversification, you would have averaged about 7-8%.
Yeah.
So I just give you that as an example to say you can't just take this recency bias of, well, what about the last 10 years? We're looking at about what about over the next 30 to 40 years of your career and
Yeah.
beyond. We're
Yeah.
trying to find some balance there and kind of balance out this risk versus return approach to your investments.
Yeah, and that's the point of diversifying, right? Is
Yeah.
that you can't just keep betting on the winner. It's eventually going to bite you. And so I love that way of thinking. So what are your thoughts on, you're dealing with associates, so you're probably dealing with people who are like, well, I want to put my money in Bitcoin or Ethereum and
Yeah.
things like that. What are your thoughts on that?
Yeah, no, that definitely has come up a lot more lately, understandably so. So our approach to just that asset class as a whole, being crypto assets or cryptocurrencies, our approach to that is absolutely. You want to have some exposure to that. That is perfectly fine. We want you to do it in the confines of your overall investment approach. So I kind of call this what I call a core satellite strategy. So right, your core strategy in our view is, and what has the most evidence behind success is, 90 to 95% of your portfolio, your investment portfolio should be in a globally diversified portfolio of stocks and or bonds, with the use of ETFs or mutual funds, right? But if you want to go outside of that with some flyers or have what I call a play account and add some exposure to things like crypto assets, I'm perfectly fine with that. Just do it with some guidelines and rules around it. Where I
So
start to
don't
get a
put it
little
all in there.
nervous,
Don't put all your money in
yeah, like
Bitcoin.
I get a little nervous when a client says, "Hey, I'm pulling out," which this fortunately has not happened. Or if I'm just talking to someone at an event and they say, "Hey, I'm taking my entire portfolio, $250,000. I'm going all in on insert cryptocurrency." That's where I'm like, "Hey, you got to remember, get rich quick and get poor quick are two sides of the same coin.
Yeah.
Like if
Yep.
you might hit a home run, you also might go broke,
Well,
and
it's
don't
like the
rely
doc.
only on the stories of survivors."
Yeah, it's like the .com boom, right? So the .com boom, if you picked the right three or four, you killed it, right? Like you absolutely
Yep.
killed it. But if you pick the other 98% of the companies that sprung up during that time, or whatever the percentage is, you were slaughtered and you lost,
Yep.
probably all of your investment. So it's about picking. You got to be really good at picking the right things. And I think this is where the passive thing comes into play, for me at least. My personal investing is like, I either know it, right? So if I know it really well, then I'm willing to bet on it, right? So if I know it, I understand it, I get it, I understand the utility, then I'm willing to go all in on it. But if I don't understand it, then it's passive, right? And then you have to diversify. And I look at real estate the same way. Like if you don't understand the market and why it's going up and why it's going down in these cities and why this city's dominating and how it's happened before, like California, there's been exoduses out of California before, and that caused booms, and then people came back, and it caused markets to really dip in certain places. Like if you don't understand that, then it's not going to be passive for you, right? Like so it's like that weird mix of, do I want somebody else to do it for me and really nail it down and really diversify and grow over the next 30 years? Or do I want to be a subject matter expert? You know what I mean? And really put all my eggs into that basket. And then it takes time. So if I'm an expert at buying real estate in, Tennessee or wherever, then I'm not investing my time into the thing that's actually generating the revenue.
Yeah.
Does that make sense?
Yeah, absolutely.
It's like this entrepreneur tug and pull, which we kind of started the conversation with, and we're kind of now buttoning it up, is that, listen, are you going to be the expert, or are you going to be the one that's running the dental practice that generates the revenue, then take it to an expert?
Yeah. Well, I love that you said that, Gary, because we have these conversations all the time. That very thing that you just talked about and described so well is, hey, if you don't want to be adding more to your brokerage account or your investments in the financial markets, if you're looking for a diversifier in like private investments or real estate, you are so much better off continuing to build your dental practices and business. You have such a massive advantage over 99% of the population because it is your expertise. Put your money there as opposed to go out and start buying storage facilities. You know nothing about storage facilities. So, but for whatever reason, I know the reason. I think we get a little bit bored. We get a little distracted. We get sucked into the shiny object syndrome. People think that, oh, well, what I'm doing is not passive. I have to work these businesses. I have to build this up. And my response always is, you have to do the same thing, whether it be with real estate or any other private investment. Why would it be any different?
Yep. I love that. Anything that we didn't cover, anything that you think that people should know about you guys or what you guys are doing for dentists?
I would say, whether it be us or, if anyone out there is thinking of hiring an advisor, right? I think a piece of advice that I would give is, number one, definitely talk to multiple. I tell people this all the time that come on consults with us, is you should be talking to a few different people. Know the things to ask the person that you're looking to hire, right? So things like, and we actually have a free piece of content on our website. You can just go to dentistadvisors.com. You can search, I think it's 10, I want to say off the top of my head. I believe it's the 10 questions to ask before hiring an advisor. And one of them being, how are you paid? What's your process? What value do you guys add? What do you guys actually do? These are things that you should be thinking about before hiring an advisor. I would kind of say the final piece on that, Gary, people always ask, like, okay, what is the greatest value there? If I could boil it down to one thing, it'd be accountability. So the reason you'd hire an advisor is if you're feeling like you're asking a lot of questions, you're thinking, like everything we just hit on, you're struggling with organization, you're struggling with where to go next, where to put your money, what to do with debt. An advisor is going to help you with that accountability.
Okay. I love it. And where can people find you? So if someone's like, you know what, I got some questions, I want to talk to you guys and get a better understanding of what you do, what's the best way to get a hold of you?
Yeah, a couple ways. So dentistadvisors.com, we have tons of content on there. You can book a free consultation where we just hop on for 30, 45 minutes. We answer any questions that you have. We kind of walk through to see if we're a good fit. We do not claim to be, everything to everyone, and we're like the only group you should be working with. We definitely serve a very specific group that sees value in us. And so the only way you find that out is hop on, book a consultation. We're really happy to walk through that with people. You can find us also the Dentist Money Show. We have a show every Wednesday. You can be seeing that anywhere that podcasts are released. And then another way is our Facebook group. So a free Facebook group. This is different than a lot of Facebook groups out there where we monitor it. We do not let like salesmen in and people in to pitch us stuff. It is just dentists. And then we moderate it ourselves as well. So it's dentistadvisors.com/group. You can check that out as well.
That's awesome. That's good that you guys do that. I love that. And I think that's very much needed. So thanks so much for sharing today. Can't wait to drop this and get it in front of people.
Yeah. Thanks so much, Gary. Thanks for having me.
Absolutely.